about the deals.
Well, hello and welcome to Halftime Report. I'm Sonia and with me are Ekta Batra and Mangalam Malu. Well, things are very quiet for the market today, just consolidating around that 17,900 level. There is a lot of action in mid-cap stocks, I must say that. But for the index itself, after a weak start, the market has seen the dips getting bought, but not conclusively, you'd have to say. Still down almost about 7-8 odd points. Auto stocks are doing well with Eicher Motors as your big gainer post the numbers yesterday. On the flip side, though, you have ITC, ONGC, Britannia. In general, consumption is on the downside. ITC, Britannia, HUL are not doing that great. But all in all, you'd have to say pretty range-bound, very quiet morning so far. Let's see how the second half pans out.
Hi Mangalam, hi Sonia. Yes, absolutely. You know, there was no real big surprise which came in from the US Jan CPI data. So that was definitely a positive. We have the Q3 FY23 numbers which have finally come to an end. So there is less amount of news flow incrementally that we are working with. So the markets are just about consolidating. An important cue to watch out for is whether or not the FIIs are actually buying the Indian market. We've seen 3 consecutive sessions of the FIIs putting in money, but let's see whether that sustains or not, or whether this is the flash in the pan. So that would be an important cue to watch. As of now, it's a quiet day.
It is a quiet day, so let's get chatting about individual stocks and individual results. Even if it is the last day, we do have a lot of numbers and a lot of reactions coming in as well. Lemon Tree Hotels, as all the hotel companies this time around reported a very strong set of third quarter numbers, over 62% rise in their revenue, and the EBITDA almost doubled year on year. The occupancy level was closer to 68%, and it did witness 77% occupancy in the month of December. Patanjali Keswani, who's the chairman and managing director of the company, joins us now. Thanks a lot, Mr. Keswani, for joining in. You have been pointing out that, you know, you are expecting 800 crores of revenues this year with at least 50% sort of margins. You've done that, you're on track to do that. Just wanted to understand the occupancy in the first quarter of this calendar year so far. How has it sustained from December? And are average room rates still, sustaining at higher levels?
So, Mangalam, it's if you look at the last quarter, the quarter of the start of the quarter was obviously at a very low occupancy because you had Diwali and Dussehra, and people don't generally travel for business during that period. So the occupancy to look at, the average occupancy to look at would be November and December, which is about 75%. And Q4 will be at least that much, if not better. As far as pricing goes, we are, the price change that occurred in our business was in October. So the price too in Q4 will be, the average rate of the room will be roughly the same, in fact, slightly better than Q3.
So on occupancy, you're saying, on occupancy you said 75%, but December occupancy was almost at around 77%.
Well,
so you don't think you can do better than that?
No, we can do better than that. I think in February we will do better than that, but don't look at 1 month. We are reporting a quarter's period. So the average for the quarter, excluding Diwali, was 75%, and I'm saying we would do the same. Now, it could be that in February we will do 80%. As a matter of fact, we are doing 80% in February. But traditionally, the beginning of the year, which is January, early part, and end of the financial year, which is March, the last 2 weeks, are lower in occupancy. So don't look at just 1 month, look at the whole quarter. And that will be 75%-ish.
Okay, all right. So you're already doing a peak of around 80-odd%. Do you think that you can do better than that? Maybe because business travel picks up? And what would that do to your margins? Because what stood out to me is that your margins are over 50%. It's the highest in 15 quarters. Say, your occupancy does trend at the levels that you've spoken of. Where do your margins stand?
See, if, I had given some, I don't like to, give a guidance, but I had given guidance because it was the start of the year, start of a first non-COVID year, which was this year. So I had said we would do double the revenue of the previous year, which had the impact of COVID, and we would do a net margin, a net EBITDA of over 50%, which we are certainly going to exceed. But is this sustainable? Very much so at the current pricing level and the current cost structure. But my view is, again, the hotel industry is a little commodity-like. So right now you're going very clearly towards the top of the cycle. And if that continues, then every year, you will see an increase in occupancy, an increase in pricing, and an increase in margins. And for next year, I could say that our margins will certainly be well north of 50%. Our revenue will be probably, closer to 1,000 crores or more. So you can, you just have to continue on this cycle and the pricing for the next 3 or 4 years, and you can do a fairly easy projection of what will happen.
Right. It's interesting that you say that you're closer to the top end of the cycle for the hotel industry. You are targeting northwards of 1,000 crores in revenues next year with upwards of 50% margins as well. Just wanted to understand, closer to 5850 is where your average room rate is, blended across all the brands, etc. For the industry as a whole, how much more room do you see for price increases? What I'm trying to understand is how much closer to the top are we when it comes to prices? Is it 10%, 15%? At what point does it stabilize and start to hurt demand?
So let me answer this with an analogy. If you look at oil pricing, for example, if there is a very slight increase in demand or a very small drop in demand, the price changes by 10, 15, 20%. So, you have in the last 2 years pricing at, I don't know, from $50 to $120 a barrel. The hotel industry is identical. An increase in occupancy, an increase in demand without an increase in supply means the prices will go up disproportionately, and the reverse is also true. So to answer your point, in 2007, our average rate in Lemon Tree was north of 8,000 rupees. And if it is 6,000, and it was doing 80% occupancy. So this is pure demand supply. And how much can the market bear it? Well, it is the market that determines the pricing, not me. So the question should be, how much demand do you see? And from that, the price will follow. So the demand I am seeing is a 15% growth every year.
Okay, 15% growth. One final question, because the luxury market is picking up so much, you have your Aurika properties as well, and some of them are stunning, but you have a Mumbai property coming up too. Can you tell us what is the, when will it open, and what is the kind of revenues that you're expecting? What's the pipeline for Aurika properties?
So, Sonia, let me go back for a minute. We have a Lemon Tree hotel, a Lemon Tree Premier in Bombay, very close to the Aurika. It's a 300-room hotel. Currently, it does north of 9,000 rupees ARR and about 90% occupancy. So if this continues, then this very hotel, that is the Lemon Tree Premier, will do 10,000 next year and 90%. Aurika is typically 30-35% higher. So we will open the Aurika. My expectation is fully open it before November. Somewhere in October, we will open the hotel. It is 670 rooms. And it will take us 2 or 3 months to stabilize it, not more, because Bombay is a phenomenal market. So my expectation is this year will be an opening period. Next year, the hotel will do about 14,000 ARR, and the occupancy should be north of 70%.
Okay, sounding extremely bullish. So we'll get back and discuss more details and maybe the impact of the wedding season as well. But thank you very much for joining in and speaking with us. So that's Lemon Tree Hotels. Good occupancy this quarter. They have done very well in terms of margins as well as revenue. So there's a complete bounce back that has come in for Lemon Tree Hotels on the business on a year-on-year basis. We'll take a short break. On the other side, we'll be talking to Rajesh Bhatia of Uflex to discuss their Q3 numbers. Stay tuned.